Over the past week, two key economic indicators have emerged, potentially influencing 10-year Treasury yields, which have oscillated between 4.2% and 4.6% throughout the month of May. First, on May 30th, the Federal Reserve's preferred inflation measure, the Personal Consumption Expenditures Index, PCE, came in lower than expected at 2.1%. This caused yields to dip slightly. Bonds generally see reduced demand during periods of high inflation and increased demand when inflation appears to be under control. So the lower than expected PCE data encouraged bond buying. Second, on June 2nd, the Atlanta Fed's GDP Now estimate projected GDP growth at 4.6%, surpassing even the most optimistic forecasts. While some analysts argue that tariff-related pull-forward consumption may have skewed the data, the robust estimates still impress many market participants. Now, a strong economy can affect 10-year yields in two significant ways. On one hand, robust growth may attract global investment into the U.S., potentially lowering yields. On the other hand, it could spark a domestic shift from bonds to riskier assets, pushing yields higher. Although rapid growth typically raises inflation concerns, making bonds less attractive, the tame PCE data from the 30th has temporarily alleviated those worries. Now, on Friday, June 6th, we'll see the next read of NFP, which could have major implications on inflation, growth, and Treasury demand. Now, if a trader believes that yields could head higher from here, they could express that by buying the June micro 10-year Treasury yield futures contract at 4.44 and targeting a move to the January highs of 4.75. Now, a stop for this trade could be placed below at 4.22. This trade can make $310 if the target is reached and risks $220 if you're stopped out of your level. Now, if a trader believes that yields could fall from here, they could sell the June micro 10-year Treasury yield futures contract at 4.44 and target a move to the psychological level of 4.00. Now, a stop for this trade can be placed above at 4.65. This trade can make $440 if the target is reached and risks $210 if you're stopped out of your level.